S&P 500 down by 10% in the last 3 weeks. That only happens once every 3 years. Generally, a correction of 5% on S&P 500 during the trading year is absolutely normal, but 10% is a little bit too much. But what's about time, and that happened. The question is how the stocks that we are currently trading or we like to trade most are doing, and how we're going to position ourselves to take advantage of the most likely upcoming rally, as normally when the market corrects, not only offer a great opportunity to buy stocks at technically discounted price, but also allow buying high quality companies that we haven't seen trading at lower levels for quite some time. Let's have a look. My name is Leslie and I'm Chief Analyst of BG Trading Australia. I hope you are well. This is not a financial advice, just as from BG Trading, sharing with you how we apply BGS20 and BG Trading strategies together with our VIP members to chase 20 to 40% profit in small and mid-sized caps with very tight stop losses. Obviously, in situations like this, stop loss becomes a reality and part of the trade. As much as it hurts, it allows not only to protect capital, but also to profit by buying the same stock by a much lower price. Therefore, having a smaller position with the same units, and when the stock rises again, then the money that you potentially lost on the stop loss would not only be recovered, but also you will be in even a higher financial position than it was before. So that's what we do here at BG Trading. Obviously, when we looking to buy back a stock that has been falling the stop loss, we gotta make sure it ticks 3 boxes. First one, we gotta make sure it is in a strong financial position or it's been improving year on year. We don't wanna be buying back a stock that has fallen on the stop loss if the company doesn't have a strong financial position. Also, we wanna make sure whatever stock we buy back is within outlook that could be positive from the macro perspective. So obviously now in the US, which is the biggest influencer on the market, we are looking into stocks that benefit from interest rate cuts and potentially what's going to happen with the economic policy within the next 12 months. That's why we are positioning ourselves again to take advantage of what could be the next rally. Obviously, you're not going to be buying everything. We buy slowly as we go, as the stocks reach buying levels according to our modeling. That's what we do. We're going to be looking each one of them right now in this video. Remember, obviously, subscribe the channel. Make sure you share this video with someone that would be interested on this subject. And let's kick off with the first stock. The first stock is CTT, and this is a stock that we have taken heavy losses, unfortunately, and I'm not shy to say that because taking losses sometimes is part of the trading, and we got to make sure we're ready not only to lock in profits but also take losses if we have to. And obviously Cetile has been a product of a Donald Trump tariff fears, and as much as I like the fundamentals and I have been covering this channel, it has exhausted all the selling indicators that we have when reach right here on what our stop loss was about a $1.05, and now it's trading at 80 cents, unfortunately. But obviously we have taken losses, but our losses has been minimized as we are now protected, you know, waiting for a potential entry in the future. But what we want to do with Cetaya is we're going to see what Donald Trump will do with tariffs. And if the tariff is announced on European products, then that's where probably the market now is looking into stocks like this to short. And once we have the confirmation that will be tariff on importers from Europe, then that's when we will have the market confirmation, and maybe that we will see even an overreaction, potentially a heavy fall on that particular day, if that happens. But until then, I wouldn't be touching on Cetaya, and even if I see some reversal, I won't be touching until I have actually the catalyst event, which is essentially the tariff in Europe importers. That's what we want to see. The products from Europe, once it is the tariff is announced, then I will be touching on this. Unfortunately, now just holding no position on this stock, took the loss and move forward for the next opportunity. That's how we do here. Now, the next one I want to be looking at is Mesoblast. Mesoblast is a stock that we definitely like, right? There was a stop loss again because we've been taking stop loss across the board. Our stop losses was just around $2.45. Now trading at $2. Has closed this gap here from when the company has received the FDA approval. This, for me, from the fundamental point of view, is a strong entry point. Again, a strong re-entry right there. Obviously still trading at the former levels. We're seeing a lot of stocks coming down from these high levels, testing the SMA 250, which is the long-term moving average that we use here at BG Trading. But this specific stock has this strong gap right there that has just been filled, and we saw a strong reversal right there. Not as strong as I would like to, and still there is potential for testing 180 before definitely bouncing back. That will be dictated by whether the market will continue to sell off or not. It's essentially as a stop loss at $2.45, anything under that to re-enter, which is a reasonable good entry again. So will be acceptable provided that the outlook for Mesoblast is extremely positive for this year, right? We have analysis available for our VIP member on Mesoblast and the reasons why the outlook for Mesoblast is extremely positive. Also, I don't think Mesoblast is subjected to have any impact from Trump's tariff. In fact, this stock could be pretty much immune, although there was a big correction right there. We're talking about now a correction of a 38%, which is a compelling correction. Again, Mesoblast is a high-risk asset for the reason that it's still not generating revenue and not profitable for the next few years. But the outlook is extremely positive, extremely exciting. So take a look on this stock. Obviously, go into the fundamentals first. Make sure this is suitable for your finances, and then you might want to take this as a potential buying opportunity, and if not now, in the upcoming days, as the market maybe still fall a little bit further. High risk stock with very, very strong upside and very strong and positive outlook for this year. Now let's move to the third one, which is Zip. Zip Also, a stock that has been reported really well is currently undertaking this downtrend, as I have been highlighting in this channel. Obviously, we attempt a trade here. Before obviously the market selling off on the back of Trump's tariff fears and trading wars fears, we thought that we would have what we call a breakout of this downtrend. That didn't happen, so we fell on our stop loss around $2.10, and now we're looking again on ZIP, as this modeling shows that this downtrend there is pretty much at the bottom of this cycle. I reckon the bottom of this cycle is between $1.80 and $1.90, and we could see a strong bounce again and once again test this downtrend line and the long-term moving average, which is now sitting at $2.45. So ZIP's pretty much into an entry level right there. Obviously, if you're going to be trading this stock, you have to have a target, stop losses again, and as the market moves down, the likelihood of taking stop losses is dramatically increased when the market is moving up. No one knows yet whether this correction is going to be bouncing soon, but historic data shows that the S&P 500 normally tends to correct every 3 years. About 10% is completely normal, okay? But we could see more or less 10% plus another 2-3%, so it could go to 13% or even bouncing now as we speak. Let's see, next few days will be. But the thing is, to trade, you gotta take a risk, and the one you're gonna take a risk is when the stocks are trading at the lower levels, not when the stocks are trading at the higher levels, as I highlighted since December in this channel right there. Buying when it's trading at technically discounted price, has strong macro outlook and also strong fundamentals. Exactly what ZIP is doing, is ticking all the boxes pretty much. ZIP, and I believe after this Trump horror, I think the stocks that are directly related to interest rates cut, when I'm talking about direct related, I'm talking about the fundamentals being directly benefiting from interest rate cut. They are the ones that could rally substantially again, and that actually includes CTI as well, CTT. But obviously, we need to have a confirmation first of what's going to happen with the tariffs in Europe in order to buy back CTI. At the moment, we really want to be looking at retailers, like domestic retailers that are pretty much trading in Australia, New Zealand, Asia, but not really in the US right now, for the reason I've just shared. Now, let's move to Bubs Australia. Bubs is a stock that we have recently traded. We locked 23% profit. The company has reported very strongly compared to previous years. So it has been bouncing from net losses into net profitability. In fact, we believe, and we even put it in our VIP group right there, we believe that Bubs is pretty much from the stocks that we've been covering in this channel, Bubs is the one that has higher value, or let's say this is the cheapest of them, fundamentally speaking, if we compare all of them together. So this is a very interesting stock, but requires patience. And obviously, when we're going to be buying Bubs again, because we bought at 11 cents here upon the quarter result, then we made the trade, and then we sold, locked in profits, and then now we might just getting to a stage that Bubs become very interesting again at technically discounted price. As soon as it goes under this red and the pink line, it is at what we call technically discounted price. The RSI also looking interesting there. So I think Bubs is also very close to a buying opportunity. I would say like 12 cents, very attractive. Anything under 12 cents, very attractive. Also, in few months, Bubs will receive FDA result, potentially receiving approval from FDA to sell their milks, goat milks in the US, which is obviously a market that has contribute for this company to become profitable again in this first half of FY25. So for me, Bubs is strong at the moment, very, very cheap in comparison to the other stocks. And not because it's 12 cents, I'm talking about valuation right there. We did a ranking valuation in comparison to all the stocks that we have been trading. And Bubs comes at first one of the list in all the metrics that we use to measure value. Now, Kogan is another one that we like, and we actually like this much better now than Cetire Limited because it's a domestic stock, it's not subjected to the Trump's tariff, and has this very, very strong reversal here. Obviously, with the sell-off of the market, that spooks investors on this type of stock, but at the moment, with this reversal here, and the strong fundamentals as well, and RBA cutting rates, we believe that Kogan is set to benefit from the macro in Australia. Also, with the strong fundamentals and trading at technically discounted price, is not much a brainer if we are applying BGS 20 strategy and multi-dimensional trading approach right here. We bought Kogan around $4.50, and then we sold around $5.10. Okay, just because we had this reversal right there and the market start falling. So we start taking all the profits we could and taking all the stop loss that we could. That's what we've been doing. And then now, as you can see, our modeling, Kogan is pretty much at where we are looking at buying again, right? So whether we're going to be buying or not, that is to be seen in the next few days. Obviously, that will be available for our VIP members as well as the targets and the stop losses and all the levels that we wanted to be carefully considering, because now when the market's falling, we have to be very precise. There's not much gap for error, and if we take if we take stocks in the wrong prices, if we anticipate our entry opportunities, we might take a stop loss once again, which we just want to avoid doing that, because it's always hurts a little bit taking stop loss, especially from companies that are doing fundamentally well like this one. And now the last one that I want to cover is email payments. Email payments, again, is one of our favorites at the moment, holding pretty strongly there, right? I'm expecting EML to break through $1. That's just because the fundamentals has been very strong. We have recently traded EML, and we are looking to buy it again. Now, provided the market is pretty much at the fear at the moment, EML is holding really, really well. Ideally, I would like to buy EML around this pink level as well, just as I demonstrated in the other stocks before, which for us is technically fair price, and under that technically discounted price. I don't think EML will come up under that unless some unforeseen information or announcement comes up, which doesn't look to be the case. But at the moment, I'm just staying put and waiting for EML, hopefully, because this is a stock that I want to go back again, hopefully, to fulfill this C here, and even come around this long-term upside trend line there, which is level B, around 85 cents. Would buy EML around 85 cents according to this modeling right there. With EML, that ends our video today. If you want to have access to the stock analysis of those stocks, why it is like them, they are available for our VP members. Just go to bgtrading.com.au, sign up, and we'll have access to a full comprehensive analysis, probability analysis, whether the stock going to go up, going to go down, also many other informations that backs up our views on those particular stocks that we are looking to this channel, right? Good luck in the next few days, guys. We still not quite sure whether we are in a bottom of this correction. The S&P SX 200, if you look at it, still moving down, which I think is going to test 7,500. Let's see if that happens. Then obviously we even be looking at moving our part of our superannuation funds and everything maybe into the top 200 companies once again, as for us will be showing extremely good value historically, obviously. Again, this is not a financial advice. You gotta make your own decision, do your own due diligence, talk to your financial planner, see if stocks that we are looking at, if you like those stocks, if those stocks are in line to what you believe is positive for your financial circumstances, okay? Thank you very much for watching. Let us know what you think, and I'll see you next video. Bye.